The reason it's good to watch, to go back and look at these things, is to trust your future judgment because it's hard to know in the moment. Right back here, I was watching this. We posted this one, where I reposted this one in August of 2025, saying, "Hey, we probably are going to get a bounce here and somewhat of a pullback." And wasn't sure though if it would come up in this range and then pull back again. But now, of course, we know our hindsight, we can see this play out here in real time that it has pushed higher. So, call it Spidey sense. It was an interesting study that I don't know many other people that are really talking about. So now we will certainly keep it on the radar, and you can see this has played out almost exactly since that August 15th reposting of this. So anyway, jumping back out of that, lot to cover still, and so let's jump around and have a look at that. So this, interestingly, the ISM has quietly been peaking up here. Now, I've covered this in yesterday's M3 class. So in each market peak, the international or the ISM, the purchasing managers, what is ISM? It's has to do with manufacturing. Not sure the exact moniker, but at every top, the 2014 top, we had the ISM peaking here, and in 2017 we had it here higher. In 2021 we had it higher here. We didn't see that happen yet. So a bull market peak is still potentially in the cards. The ISM has been below 50 for 3 years now. And the Bitcoin 2025 top, that explains why it wasn't really there. And of course, liquidity, the U.S. net liquidity plus M2 divided by the debt, the U.S. debt, the last cycle here, we saw that peaking up in the 95 level as well. And of course, we've seen that liquidity. We haven't seen that return yet. It's come down and it's still heading lower. So for these markets to really recover, we've got to see Market Structure Bill, Clarity Act, and we just need to see that liquidity and quantitative easing coming back in. And, the interest rates are now low enough that a rate cut should help. But the other reason markets are falling is comments on the new Fed chief coming, having some hawkish thoughts on that. Everyone thought, all right, Trump's guy will come in and drop interest rates to zero. But the problem with that, as Mike was alluding to, is deflation. And those of you following Camel Finance for last year, he believes that it's a controlled demolition of the dollar, which would allow us to kind of offhand or hand off a lot of our debt issues to other countries and allow us, we want a weaker dollar to be able to refinance. We still have that $7 trillion in debt that's due to be refinanced. So it's complicated. It's complicated. We'll just leave it there. The best we can do is read the tea leaves. And I am currently completely out of the market. I didn't want to post that and retire rich yet, but I did an M3 as of late last night or the night before. It's already starting to blur. But I do encourage you guys to de-risk, take some off the table, and not ride this all the way down, because as we saw, we certainly could have quite a bit deeper projections. Let me get out of this and jump right over to Bitcoin itself. It's down 1,600. At this point, there's nothing to hold us up. I think right down here, probably 53K. We could go as low as 49K and dip down below that and freak everybody out, flip everybody short. A bounce is in order at some point, but I think it's going to drop down in this area. If we look at it on the daily, I will post this in the chat because I did put it in M3 earlier today. And I'll make a note also, though. See this head and shoulders that we caught? That also, the head and shoulders is a very good topping indicator, and it also happened in the last cycle. That was one of the reasons that I said we'd go lower, and didn't know that we would be right. This isn't about trying to get it always right. It's not about being right. It's about being on the right side of the trade. And certainly when this started to crack and break down from here, that was another signal this would head much lower. And in which we are. So there's a huge sell block right here on Bitcoin. I don't think we hold here, guys. And so I think we're going to zigzag our way down into this range. Hopefully put in a higher low. This puts us out into March 26, and then maybe back in this range by April. But I think then we have another rollover, and maybe that's a sell the news once they put in the new Fed chair. And who knows what he's going to, excuse me, I had a hiccup. Who knows what he's going to say. And then if we do drop lower, here's that 45K target that it would be sort of the measured move on some of these other targets here, namely, if we were to get this, I believe this was the one, 46, 47K. That's a 50% drop. on the 5-day Gaussian channel. I'm purposely not showing you. There's a bazillion studies out there, but this is one I've been tracking for some time. And in every prior bull cycle that matters, we can't really count 2021, but we will go back as far as 2015, rather, when price got below the Gaussian channel on a 5-day chart and then rode it sideways a bit. It then dropped 60% there after dropping below the Gaussian channel. Similarly here, when it got below the Gaussian channel and turned red, it's 50%. And so you can see the COVID crash was an anomaly, and then that last cycle of last year kind of rode the Gaussian channel, flipped red, and then dropped. So we're seeing a very familiar and similar drop from this. On this case, we got below the Gaussian channel, kind of rode it for a bit, and now we're seeing that drop, and the measured move on that at 50% would be around that 46K. So bottom line is, if you are long-term hodling Bitcoin, and I think long-term that's a great play, but maybe taking some off the table makes sense. However, in this study, and that's why we never go all in or all out. If we reserve the right to be wrong. And in this study here that I massaged for my old liquidity study, what we're looking at here is the range between all-time high breakouts, the range between all-time highs. And so we saw 49 bars, 47 bars, and then I was pontificating, would we see 47 bars or 49 bars, which would have got us to a December high, and it turns out it was, so these cycles peak to peak are shortening slightly. 1,400 days in the prior cycle, 1,400 days exactly in this cycle. What I did add to this, if we look at these red boxes, is generally it's peak to trough. I guess that's how you say it, peak to trough, yeah, 13 bars. Yeah, this was 14 bars back in this area, a little bit more. And I guess you could argue it went extended all the way out to here, but for the most part, it consolidated, and the bottom was holding at the 50-month SMA. I've got the 50-month EMA and the 50-month SMA. They're both good, but holding here. Bottom line is it held here, and so that 13 months holding the 50-month SMA and EMA seems to be pretty consistent. We saw that here in this cycle. We saw it here in the 2021 cycle there down at the bottom. So it's reasonable to assume that we continue down to the bottom for the next 8 months or so into November. But what is unusual here is that we are already at the 50-month SMA and EMA. We did drop below it in the last cycle though, and this was largely at FTX. So there's an argument to be made that maybe we hold here and we start to turn up higher. If we peak on the tether dominance, and this thing, let's say we wick down below the 50-week SMA there, the blue line, and recover that, there's certainly a case for that to be a much shorter cycle or getting a bounce. And also worth noting, in the prior cycles here, we usually had alternating green months. It's unusual to see 4 or 5 red months in a row. So if we come into the end of February and it's still red and it's holding the 50 SMA, I would suggest we get a bit of a rally. Maybe then into March you get a bit of a bounce, chop around a bit, and then, but I don't think this goes to new highs, certainly before October, November. Reserve the right to be wrong, however, because of the things we mentioned: liquidity, market structure bill, Clarity Act, the reasons they're important, the sidelined money. There's a lot of money that really can't come into an unregulated industry. So there is that money, but they're not stupid. They don't want to just come in because of that. That's the other side of it. So we can't expect a dramatic race to a new all-time high just because they passed the Clarity Act and market structure bill. That just gives the time to the big investment houses to then pick up the phone, call their registered investment advisors to tell their clients, so then they have to pick up the phone and call the clients and say, all right, we're allocating to Bitcoin. And so that'll be a slow, gradual process. So I do think we can hit those higher numbers by the end of the year. And maybe not, maybe it is 2027. I forget who I was watching that's calling for a major bull super cycle in 2027. It'll come to me. It'll come to me as I keep going. But it was somebody relevant, and worth listening to. But the thing is, we just don't know. So much can happen. All right, let me look at one more thing too. We'll look at the cycles on a daily time frame, looking at the camel cycle indicator. I'm really not trying to throw more stuff. Less is more, but want to call attention to, cycle trading was new to me this year. We had that course with Juan Villaverde. I met him at the Bitcoin 2021 conference and various times over the years. That's his core work, based on Hurst's market cycles, and of course Camel Finance, one of the better ones out there, has his own indicator. What is interesting, and you guys have heard me talk about and show, when this aligns with our early reversal indicator, the ERI, these have a very high correlative and overlap. And when they are on the same area, daily cycle low, weekly cycle low, and the ERI, we almost always get a push. And we can see that back here, at the beginning of this massive run-up. And I've talked about this before. I believe that the ERI is capturing the institutional programmatic buying and selling. It was just pattern recognition. It's something I saw on an indicator we were going to deprecate, for those of you who were new, and then we coded it. And I asked Camel Finance on the interview we did together, because I said to him, these tend to fall on the same day or within a day of each other. And I said, I wonder if the institutions are also using cycle theory, and that's why your cycle indicator is overlapping with our ERI. And he said, that's very interesting. So we see that happen again here. Bottom line is, we don't have, it looks like we may have a daily cycle, a failed cycle here. If we can't put in a higher low, and this holds, then that's likely what's going to happen, and we'll want to wait for the next daily cycle low and the next ERI. And at which point, if we're in cash, we'll be happy to be buying that and buying those bounces. So that'll be something we'll revisit. Not every time, but we'll revisit it in a future time. Also have some new technology that Joe's been building, and this is sort of a single indicator of all of our best signals, including new ones like the VWAP, the volume weighted average price. That's mostly what the big investment houses use. Stochastics, momentum, money flow, RSI, volume imbalance, volume spike. And if your head's spinning, that's okay. You don't need to learn these. It gives a overall probability score, which at this point is showing 57% bearish on Bitcoin. And I'll come back to that on how that might be useful for us on the, look, we need to be able to adapt to succeed in these markets. If my thesis is right, I don't have any direct evidence, but empirically I believe, and I've seen some clues that these AI programs and companies that are selling the core market making technology to the market makers, they're advertising superior returns for the market maker and exchanges, which means make more money and steal more money, for lack of a better term, from retail. So with that in mind, that's something that I'm going to be looking at, and how to navigate these markets in a little bit of different fashion. But TLDR from here, probably more downside, and covered that. I want to just talk about this. So the head and shoulders target, which I was originally signaling could go down to that 44K level, that's certainly in line with other things we're looking at. However, as of now we're still on a monthly chart. If we recover the 74K on the monthly time frame and push up, we could still push up to 100K and put in a right shoulder, and thus extending out the drop into sort of July, which also fits that 2021 cycle where we saw a big crash in July and then we ran up to the new highs. So it's very, very interesting to see how this will play out. I would almost rather not see a head and shoulders breakdown, because that measured move is lower. If we just push down and hold these trend lines, then we can push higher sooner. And it's impossible to know, but these are very important trend lines going back to 2017. Here caught the COVID crash mostly, the last cycle low there. And so we can reasonably come down into this rising trend line around 58K, but if we start breaking that, we do have this lower trend line, but it breaks that multi-year macro trend line higher. we could still be in a bull market, but we don't want to see is the slope diminishing, because that means the overall macro bull market is running out of steam. So once again, we're in a waiting game, but I will tell you where you might be saying, where do we want to be going all in back in crypto, in Bitcoin? Simple answer, our early reversal indicator on the monthly chart has only fired 4 times, and only 1 time since we've had it, because we developed it and discovered it here. But it is based on real back data, so it is valid, and it's only fired 3 times, 4 times rather, and each time was at the market cycle low. So what we'll be looking for, I'd have to pull up a different source of data to show these over here, but you can see it fired here back in 2019. You can see it fired here in January of 23, and that was the signal that allowed me to say, get back in the market, pounding the table. So we'll be watching on a monthly time frame for a bullish engulfing candle and a bullish early reversal indicator. And that's it. It certainly helped that we had this money flow to validate it, because typically these money flow midpoints don't get taken out. They get treated as support. You can see 2 months later, pulled back to that midpoint. So I don't want to get too technical here, but in terms of what we'll be watching for an ideal re-entry in when we do get it, it would be that. And I'll just do a little screenshot of this. So make sure you have the signals, the ERI signals for one, because if nothing else, let's say, if that's all you traded, and then waited for these things to get extra frothy and sell and wait for the next one, you'd be a lot saner and richer. But this isn't happening anytime soon, I don't think. But when it does, that's what we'll watch for, and that's where I will go in all in with leverage and options. So hopefully that's helpful. And if you have any questions, go ahead and ask those. I'm just going to touch on this now. This is one of the things we're working on. This is the new option spread trader scalper that we released, and a number of you are in this. It's in beta, so we're still working through it. But you can see the indicators have been very good at showing when price is likely to go higher. Now this is on the Bitcoin futures. Back here on December 30th. It triggered a call spread to buy, and so basically, without getting into options here, this went up and was in profit, and then we had some sell signals here that typically shooting for a 25% flat profit target. The difference is there's not going to be massive liquidations and stop losses and wicks. These are options. They do expire worthless, so you have to remember to sell the front month if it's getting close to expiration by the next one. It's not a commercial for this service. I'm just letting you know we do have a bear market strategy, and here it triggered a put spread. So if you bought puts on this here, would have been a great trade on the way down, and I had in the demo account done that along through here, and also bought some gold calls on the way up. So already have 15% gains in a mock trade, a demo account using options. What are we seeing now? Continuing to see that Bitcoin showing negative pressure on put spreads all through here. I think it's a good time to buy puts on Bitcoin, either on the micro Bitcoin futures. You can do that through Iron Beam. I'm not going to go into detail here. I'm just giving you guys some ideas of if you're interested in some bear market strategies. I don't recommend buying futures, perpetual futures on margin. Too dangerous. But with these, we can more easily do this. Easily, in air quotes, it's a little bit more to place the trades, a little more complicated, but it looks like Joe has automated this pretty well. And the other thing is, we're going to be also offering it on the iBit. And you can use Tradier, you can use eTrade, you can use anything that has options on the iBit. And the other the reason I like the iBit, as you guys know, is it has gaps like the CME gaps, and these tend to fill. We just filled an old gap from 2024 all the way back in November of 2024, so these can take a while, but they do act as magnets to price. So what does that mean? That means at some point the iBit will push higher to $40 and fill that gap, and likely push up to 46, and likely up to 53. And if we get long options on that, that's a great way to capitalize on that trade. And again, without getting into the weeds, there's a way to mitigate risk by buying one option and selling the other option. So keep an eye out for that. We'll probably reopen that sometime in March. It's closed right now. We've got a core group of beta testers, but just understand all is not lost. And as we continue to sharpen the saw, and you're in our community, I think we have a massive edge with this because no one else is teaching it. Nobody else is really doing it. People are afraid of options, but you really don't need to be. And some of the option exchanges these days are just way easier to do. And the fees, the trade fees are minimal. But when liquidity dries up, Mike alluded to it earlier, the spreads can widen. So I threw a lot at you there. Just maybe park it in the back of your brain that there's something we're working on, and where you can trade options on crypto futures. And it's so new that they just recently added. They originally had Bitcoin, Ethereum, and they had XRP and Solana. They just added Cardano, Stellar Lumens, and Chainlink. They're brand new. They're so new. There's only one or two bars, only 4 days worth of data. So that's too early. We don't want to do that. But this is the future, is options on crypto, and it's a little different animal. And but you can do options way out in the future. Retire rich if you have a longer term kind of what's the right word? Forecast. I can't think of the word at the moment, but longer term target on that, then these are things that might make sense to trade the leaps on these once they get there. So anyway, that's all I wanted to touch on about that. Again, not to dive into that too deeply. So anything else? Any questions on that? Mike's got to run. Yeah, thanks. I got to run as well, you guys. So nice deep class, lots of data in here. And so if you are watching and would like more information on the crypto option trend scalper, I guess just reach out to us. And but something for everybody. Not here to sell you more stuff, just here to give you the tools to navigate these always emerging markets. And of course, that's not for everybody. But we are starting to see some data. Oh, I know what I wanted to show. I knew there was something. Hang on. Okay, so on the monthly chart, what we are seeing is a huge drop in the RSI. Mike mentioned that. Now, here's the thing. The RSI on a monthly time frame is hitting this lower area of 43. It has gone lower back in December of 2022. I have a note on here. Check the daily and weekly the reversal levels. I'll do that now. Also, we've been following this by bearish divergence for some time, and that has certainly played out and been very accurate. So something we'll want to watch back on the way up. As far as the RSI, though, on a weekly time frame, it is as low, almost as low as it's ever been. So I have an alert there when it actually hits 26, probably get a bit of a bounce. So that's another signal that March could be an up month. Maybe we can catch some swing trades. But mark my words, that is not the market. Bottom of the market is very likely not in. If we look at a daily basis, we've seen RSIs go as low as 15 on the daily time frame, and we did just pop down and push back up from that. So I'll be watching that for you guys. And the other thing I wanted to watch here and look at, certainly money flow has been coming down and breaking this support. So we've got more downflow on the money flow side. If we look at the last bear markets, 2019 got this low. 2022 we got all the way down here. So we're going to want to watch this on the money flow side. I will set an alert when we get back down a low below. It doesn't let me do alerts. Yes, it does. Okay, crossing down 30. And then I also want to know if we get down to this 20 range, other signals to be really looking at re-entering the market, and I guarantee nobody else is going to be talking about it. And so that's some more alpha that we have here. The last thing I'm going to show you is the 2-month stochastics RSI, showing more downside. As you can see, peaked over here in 2021 of March, started heading lower. We didn't really hit even the top of the market till November down in here, and bled all the way down here another 6 to 7 or 8 months to where the stochastics RSI gets below 1. And on the 2-month chart, same thing back here. So we've got considerably farther to drop on that monthly time frame. So it's not a time to be long-term bullish. If you're thinking I'll just ride this out, you can. But I would submit to you, taxes aside, take some off the table and be ready to buy back lower, the dollar cost average strategy. It's still a long-term bullish macro strategy, but if we can sell high and buy low, it's the opposite of what you hear, buy low, sell high. But sell high, buy low is actually better, because if you're buying low, just like in real estate, that's where your profits come from. So, all right, you guys, thanks very much. Thank you, Barbara, and glad you enjoyed it. Hang in there. Look, our time will come, and the biggest thing right now is preservation of capital. I know it's hard. I just took a big loss in some of the privacy coins, but I'm going to ride it out and wait to buy back lower to get back to break even sooner. The last thing we want to do is ride those down and then panic sell at the bottom, because I do think we have more downside. So, all right, cheers, you guys. We'll see you. I will not be here next week. I think I'll be in Florida going to an event, but I'll, of course, keep updating everybody in Signal. Okay, cheers, everyone. Bye.